So, good morning to each one of you. Happy morning to each one of you. Thank you, Kajal Madam, for that introduction. And first of all, I would like to compliment each one of you for joining this particular program on this Sunday morning, on this weekly of morning, on this last day of the current financial year, the 23-24. As we all are aware, the Divya Jyot Valuation Foundation, they are taking pain in arranging this type of CEP program on a regular basis. So apart from providing us the opportunity to comply with our regulatory requirement of CEP over, so this type of program will also give us an opportunity to share our knowledge with each other. After all, we all are experienced professional and practically we learn from each other every day. So this type of program will really help all of us, and that will also provide opportunity to upgrade our knowledge, to update our knowledge, to revise our knowledge. As we know, the field of insolvency, the field of valuation, that is having a very wide coverage, and therefore it is a need of the hour. We get ourselves updated on a daily basis. So, in that direction, as we all are aware, Divya Jyoti Valuation Foundation, they are doing the commendable job. Uh, Today's topic given to me is factors which need to be considered in evaluation of various types of asset. And time available with me, that is limited to 2 hours. You will appreciate that there are many factors, many development which are taking place. So probably even if we discuss whole day on this particular topic, so that may not be sufficient. So given that limitation, in next 2 hours, whatever best inputs I can provide on this particular topic, so I will try and do that. So with that, please allow me to share my PPT so that we can start the deliberation. I hope my PPT is visible to each one of you. If you face any issues in visibility of my PPT, please inform me anytime. And my sincere request to each one of you, please make this session as knowledge sharing session, as interactive session, which will be in our mutual interest. And when you are not talking, so please mute yourself so that actually we can have this session in continuity. So factors are to be considered for evaluation of various assets. So here the keyword is the asset. So first we will try and understand the meaning of asset. So traditionally what we understand by asset, that is resources for a generation of future economic benefit. So that is the meaning of which we understand in a traditional manner. But when we are talking about the valuation, so a meaning of asset or asset, that is provided under clause 20.1 of the defined terms under IVS, of the glossary under the IVS. So going by that, actually the meaning of asset and asset, so that refer generally to items that might be subject to evaluation engagement. So unless otherwise specified in the standard, so these terms can be considered to mean asset or a group of asset or a liability or a group of liability or a group of assets and liability. So what I am trying to highlight, even the liabilities or a group of liabilities are covered within the meaning of asset when we are going by the valuation. So even entire business that will be covered under the meaning of asset, entire business or business interest. So that will be within the purview of the asset as per the meaning provided under clause 20.21. And you will appreciate that what is a group of assets and liabilities. So that is actually will cover entire business entity, entire business enterprise, entire company, entire partnership firm, entire proprietorship firm, whatever name we may call it. So asset is not limited to just resources to generate the financial asset. That will have a very wide coverage, very wide coverage. So that is first thing which we want to clarify. And second, as we all are aware, IBS that is divided into two parts. We have the general standard and we have asset standard. So in all, there are 8 asset-specific standard, starting with IBS 200, ending at IBS 500. So there are 8 asset-specific standard. And as you all may be aware, recently, in the recent past, that is on 31st of January 2024, the IVSC, International Valuation Standard Council, they have notified the revised international evaluation standard. So on 31st of January 2024, they have published the revised international valuation standard, and that will be made effective from 31st of January 2025 mandatory. So actually, a 1 year time is given to the registered valuer to comply with the new standard. To comply with the new standard. So in that also there are 8 asset-specific standards. So number of asset standard that is same under both current international valuation standard and the revised valuation standard. But actually, the differences are like in IBS 300. So that is related to plant and equipment. So if you refer to current version of the international valuation standard, so that is named as plant and equipment. But in a revised standard, that has now renamed as plant, equipment, and infrastructure. Plant, equipment, and infrastructure. So guidance on evaluation of infrastructure project, that is, you will appreciate that is very important in current era, where actually government is boosting on a development of the infrastructure. So guidance on valuation of infrastructure project that is provided under IVS 300. Apart from that, the IVS 500, which is on a financial instrument, so that is revised comprehensively. That is actually rewritten completely, revised comprehensively. Major changes have been made in IVS 500. So those of us who are from SFA, from asset class securities and a financial asset, so I will suggest that you go through this revised guidance, which is part of IVS 500. In brief, we will try to cover it today. Apart from that, in other asset standard, so there are minor changes. There are minor changes, not major changes. So business and business interest, intangible asset, non-financial liability, inventory. Then we have the plant and equipment, real property, development property, and the financial instrument. So these are the 8 asset-specific standard going by the international evaluation standard. Now coming to actually the general standard. So you will appreciate that any evaluation assignment, whether we are doing evaluation of plant and machinery, land and building, securities or financial asset, whether we are doing valuation of means real property, tangible property, intangible property, financial asset, whatever name we may call it, whatever may be the purpose, the compliance with the general standard, that is mandatory. That is mandatory. So very important to understand. So if we actually old general standard or the current version of general standard, which is published on 31st of January 2022, and that became effective from 31st of January 2023 compulsorily, mandatorily. So going by that, there are five asset standard. There are five asset standard, starting with IVS 101, ending at IVS 105. So there are five asset general standard. A scope of work, the process of due diligence, that is investigation and compliance, guidance on valuation report, we can get from IVS 103. A basis of value, as its name suggests, that is the base. Base means foundation. Those of us who are from land and building asset class, we will appreciate the importance of a foundation structure in a building. So if foundation is strong, entire building will get strength out of that. So in evaluation, the basis of value or standard of value, that is acting as a foundation. So very important basis of valuation, and the evaluation approaches and methods. So there are in all five general standard, compliance of which is mandatory in all types of evaluation assignment. New general standard, so we have seven in number. So you will appreciate that there is a increase of two new general standard from five to, it is now actually increased to seven, and that is actually now renumbered from IVS 100 to IVS 106, IVS 100 to IVS 106. So a valuation framework, a scope of work, basis of value. So earlier basis of value was IVS 104. In a revised, that will become IVS 102. The evaluation approaches, so that is now renumbered at IVS 103. Data and input, so that is new. Valuation model, so that is new. Data and input, you can also relate with investigation and compliance in a way, and reporting and documentation. So that is actually, earlier it was 103 and now it is 106. So these are the new general standard, seven in number. Now, many times questions are asked exactly which order a valuer need to follow in a evaluation assignment. How to proceed in a evaluation assignment. Which activity should be covered first. So, what is the order of activity that need to be followed? So, probably reply to that is given with this general standard, that is now actually arranged in most logical manner. So earlier that order was not logical, because normally the valuer will prepare a valuation report at the end. But guidance on that was provided in 103. Now that is at the last, so that is 106. So likewise, whenever actually valuer gets the assignment, valuation assignment, first thing a valuer need to determine is the evaluation framework. So guidance on that we will get from IVS 100. Scope of work, finalization of scope of work, very important, because that will determine the estimate of value. So we all know there are three documents which are very important to finalize the scope of work. Number one, the appointment letter. So appointment letter is issued by the client, and that is accepted by the registered valuer. And in appointment letter, primary condition, terms and conditions of the evaluation, that will be incorporated. Then we have the engagement letter. So engagement letter, as we all are aware, that is issued by the registered valuer and accepted by the client in writing. And in that entire scope of work, the methodology of valuation, that will be described. And third important letter, which a valuer should always obtain in writing, that is the management representation letter. So with the management representation letter, the management or client will provide the information, document, detail, data, whatever name we may call it. So that which is needed for a completion of the valuation assignment. So three documents very important in finalization of scope of work. Basis of value, as we discussed, this is the base of entire evaluation assignment. That is the foundation of entire evaluation assignment, very important. So once the scope of work is finalized, next thing a valuer need to do is to finalize the basis of value, is to finalize the basis of value, which is very important. Then actually next is the evaluation approaches. So that is the next thing a valuer need to do. Valuation approach is a method, as we all are aware that a very important role. And then we have the data and input. So that is new development, a new general standard, and I will suggest you go through this because major changes have been made in that. So we will cover that in a brief, and then we have the evaluation model and documentation and reporting. So these are the general standard, and I will take just 1 minute. Give me a 1 minute. There is some technical issue. Mouse. ठीक है ले आओ तो बेटा जल्दी खोल तो ठीक है खोल ना So I am sorry. Actually, we will continue. There was some issue with my remote. Uh, so data and inputs. So there are major changes in that new valuation general standard. Then we have a valuation model. So under a valuation model, now the use of automated valuation model that is formally recognized. Automated valuation model. So what is the meaning of automated valuation model? How to make use of automated valuation model? So guidance on that is provided under the IVS 105, and then we have the documentation and reporting. So what we will do, we will start with the IVS 200. So IVS 200, that is on a business and a business interest. So what is the meaning of business? So when actually we are doing the evaluation of entire business. So, or when we are doing the valuation of equity. So, equity will first need the valuation of business, and then only we can determine the value of equity. So, for the purpose of even equity valuation, first thing we need to do is the evaluation of entire business. So, what is the meaning of a business? What is the definition of a business? So, we will start with that. Here, I have actually from each asset standard, 8 in all, I have actually incorporated the brief guidance on that. So in the context of evaluation, business generally will involve organization on integrated a collection of assets. So in the beginning itself, we have seen a group of asset and group of liability that is also part of asset, and that is the precise definition of the business. So integrated collection of asset which are engaged in commercial, industrial, service and investment activity. So there are four types of activity which can actually come within the definition of business. We have the commercial activity, any company doing business for profit, that will be regarded as the commercial entity. Industrial, any company which is engage in manufacturing, so that will be regarded as industrial company. Service organization, IT company and all, and then we have the investment activity. So investment company, we all know there are host of investment company. That is the that will be the covered under the definition of business. So business typically include more than one asset. Asset will include the liability also, or a single asset where the value is dependent on employing additional asset working together to generate economic activity distinct from individual asset. So this is actually the crux of entire this definition, working together to generate the economic activity, working together to generate the economic activity, and that economic activity need to be actually different from the individual asset, different from the individual asset. So you can visualize actually one particular scenario where actually this single asset. So, supposing a company has got a telecommunication right for a particular sector, a particular region in auction from the government. So that actually, although that is a single asset, but some actually more asset, some additional asset will be deployed, and then when they will work together, so that will be regarded as business. So majorly business, we can conclude that we have four types of enterprises: the commercial, industrial, service, and investment. And typically, that will include more than one asset that is working together to generate the economic activity. So that will be regarded as a business. Now, intangible asset, because we will cover in a next asset standard the importance of intangible asset. So An individual intangible asset or a group of intangible may not constitute a business, but are within the scope of standard if they generate the economic activity which is distinct from the individual asset, which is distinct from the individual asset. So that is a very important. Even if there is a single intangible asset, so that will also come in definition of business. Normally, that is part of IBS 210, the individual intangible asset. Normally, that will be covered under asset standard IBS 210, which is on intangible asset. But that may also get covered under IBS 200. A condition is actually they generate economic activity which is different from the individual asset. So that is the actually coverage of intangible asset. A going concern a value very important in when we are talking about the business valuation. So a going concern value or the value of goodwill. So that is a most important consideration. So any commercial, industrial, service or investment activity that may result in greater economic activity or the value, then the asset would generate separately. So supposing actually one company is having a plant and machinery asset, land and a building,
हाँ यार
and
उसमें मच्छर बहुत सारे हैं।
SFA, may I request all participants please mute. So one company, may I request all participants please mute. So one company, supposing is having all three types of asset, plant and machinery, land and building, and SFA. And plant and machinery that is valued at a 50 crore, land and building that is valued at say 100 CR, and SFA that is valued at a 30 CR. So if these assets are sold separately, so that may actually get or realize a 50 crore, 100 crore, and 30 crore, in total 130 crore. But when actually these assets are sold collectively, these assets are sold collectively in one group as a going concern, as one business. So that may actually realize 140 crores, 140 crore, because that need to be more than this 130 crore when actually that is sold as a group of assets. So this additional 10 crore, that is the value of goodwill. Additional 10 crore, that is the value of goodwill. So that is what is highlighted here. The commercial, industrial, service or investment activity of a business that may result in greater economic activity, then the asset would generate separately an excess value that is referred to as the going concern value or the goodwill, and that may constitute a separate asset under a certain basis of value in a certain situation. So that is actually one of the example is PPA. So in a purchase price allocation, as we all are aware, purchase price allocation is done in the cases of mergers and acquisition. So in a mergers and acquisition, where actually the acquirer has acquired multiple asset for a consolidated purchase consideration. So for the purpose of reporting in a financial statement, the fair value of each of these asset will be ascertained, and if any difference is there, so difference between purchase consideration and net asset acquired, so that will be considered as goodwill. So residual value that will be considered as goodwill. So that is one of the example. So excess value or the which is referred to as the goodwill, that may constitute a separate asset under a certain basis of value. So when we are taking the basis of value as a fair value as per IFRS or Ind AS, so that will be regarded actually a separate asset. So that is about the goodwill and legal forms of business. So we all are aware of various legal form like corporation, partnership, joint venture, sole proprietorship, even the division, branch, lines of business, segment, case generating unit, or a group of asset. So all this actually are different forms of business, various legal forms of business. So even actually, when a valuer gets assignment of a particular branch of a company or particular a division of a business, like one company is dealing in telecommunication and retail. So when actually a valuer gets assignment for evaluation of retail business, so that is a separate division of the company, but still that will be within the definition of business, because ultimately what is business? A group of assets and group of liability working together to generate the economic benefit. So when we are talking about the retail division of a company, so that is actually group of assets and group of liability that is working together to generate the future economic benefit. Likewise, case generating unit, any line of business segment, all that will be covered within the of different types of businesses or legal forms of business. Now, nature of business interest. So this is business. Our actually standard is on a business and a business interest. So what will be the meaning of business interest? So interest in a business, that is security, that can take many form. That can take many form. So to determine the value of a business interest, a valuer should first determine the value of underlying business by applying the relevant standard. So first condition, like actually the valuer is determining the value of equity. So equity, that is security, that is business interest. So in order to determine the value of equity, the first thing a valuer need to do is to determine the value of the underlying business. So therefore, actually, in majority of the cases, when we go by DCF, what we derive is free cash flow to firm, or actually FCFF. So that first we derive that and then we determine the value of equity. So that is nature of business interest and applicability of standard. So business interest should be within the scope of standard, but depending on a nature of interest, certain other standard may be applicable. So normally, actually, business interest is covered within IVS 200, but that can actually, there can be exception also, like that can be covered under the financial instrument IVS 500, which is also on business interest. So that is about the applicability of standard, this IVS 200, and economy value and legal entity. So economically, substantially all of the value of asset within a business that may reside in a single asset, and absence of excess value that will not automatically mean that asset or group of asset does not constitute a business. Moving forward, so scope of valuation, that is very vital in any type of assignment. So IVS 200 also, how to determine, how to establish the scope of work. So a valuer must determine whether the valuation that is for entire entity or shares or a shareholding, within shareholding, whether that is controlling right or a non-controlling right, or a specific business activity. So which are the business activity covered? We have seen in the previous slide, different various legal form, division, branches, line of business, segment, case generating unit. So that is actually highlighted here. Scope of work, whether that is entire entity share or shareholding or a controlling or non-controlling shareholding or a specific business activity, and type of value provided that need to align with the purpose of valuation. Like if the purpose of valuation is transfer of business. So you cannot take liquidation as the basis of value, because a transfer of business as a going concern. So we need to take the market value as the market value as the basis of value, and not the liquidation value. So that is what is highlighted here. Type of value provided should align with the purpose of valuation, and that must be communicated as part of the engagement scope. So we discussed the importance of issuance of the engagement letter. Now, clarity in a business or business interest definition. So it is crucial to clearly define the business or a business interest being valued, even when a valuation is performed on entire entity. So that is a very important. Again, that will be in this only a scope of work. So what actually is being valued by the valuer, that need to be defined in a clear word, in without any ambiguity. So different levels of value expression that may exist, and clarity is essential to avoid the ambiguity. So first, actually, as we discussed, when actually valuer is taking FCFF, free cash flow to firm. So what value first will be arrived? That will be the enterprise value. That will be the value of entire business. And from FCFF, actually, if we reduce the debt component, then actually we will arrive at the equity. So these are different levels of value, and that need to be expressed with clarity. That is what is highlighted here. Now, these are the types of value when we are actually making the evaluation of a business. So types of value, enterprise value. So enterprise value, as we all are aware, that is also considered as the takeover value. So for actually normally for a listed company, what a valuer determine is the takeover value or the enterprise value. So we all know the meaning of enterprise value. That is total value of equity. So total value of equity is nothing but the market capitalization, the number of shares outstanding multiplied by the current market price. So that is the value of equity, plus the value of debt. Here, very important, we need to consider the market value of debt and not the book value of debt, because here we are considering the market value of equity. So very important to consider the market value of debt. We can actually compare apple with apple, not apple with mango. So very important. Market value of debt, and according to me, determination of the market value of debt, that is more challenging as compared to a determination of value of equity, because uh, uh, the valuation of a debt security, that is more complex always, because getting comparable, that will be very different, because each company may have actually different type of debt security with reference to coupon rate, with reference to maturity, with reference to actually yield, which is earned by the investor. So that will make it more complex, and debt related liability minus cash and cash equivalent. So that is the enterprise value. The invested capital value, so that is another method of valuation of business. So here actually that is total money currently invested. That is very vital. So on the date of investment, what is invested in the business? So that is irrespective of source. Irrespective of source means a capital structure of a company that will comprise of debt and equity. So here we are talking about the irrespective of source, and that is reflected as total asset less current liability and cash. So total asset less current liability and cash. So what will be left will be the shareholders equity plus non-current liability, plus non-current liability. So that is nothing but the capital structure of a company comprising of equity and non-current liability. Then operating value. So this actually we do in a majority of the cases. So that is total value of operation. And from there, we exclude the non-operating asset or a liability. And then equity value. So value of the business to all equity shareholder. So that is equivalent to FCFE, free cash flow to equity. So these are the types of value which we need to assign for a business: enterprise value, total invested capital value, the operating value, and the equity value. Purpose of a business valuation. So there can be many purpose for which a business valuation is needed. So that actually include the acquisition, merger, sales, taxation, litigation, insolvency proceeding, financial reporting. So for all this purpose, the evaluation of a business will be needed. And a business valuation that may also serve as input or step in other valuation like stock option. So when actually we are making valuation of ESOP. So ESOP actually employee stock option plan. So there actually in order to make valuation of option, first thing a valuer need to arrive at that is the value of equity, value of the underlying or a value of equity. So actually business valuation may serve as input or step in other valuation like stock option, specific stock class or a debt security. So that is about IBS 200. And these are the special consideration for a business and business interest. So ownership right, business information, economic and industry consideration, operating, non-operating asset, capital structure consideration. So all these are actually guidance on all this is provided in detail in IBS 200. So whenever we are doing the valuation of a business or a business interest, we need to go through these considerations also. Moving forward, so now we will move to IVS 210. IVS 210, as we all know, that is intangible asset. Intangible asset. Now, the valuation of intangible asset, that is very complex. We all will appreciate that because actually the internally generated intangible asset or homegrown intangible asset that is not being reported in the financial statement as per the guidance provided in financial statement reporting framework, as per the guidance provided in financial statement reporting format. So actually, this you will get an idea how critical the valuation of intangible asset is. As you all are aware, in a current era, the companies are becoming asset-lean company, and mainly they derive value out of the intangible value. So all the IT company, all the e-commerce company, for example, they derive a value out of their intangible asset. So this actually chart will give you an idea about the global composition trend. And this I have actually taken from Brand Finance PLC. So this is leading consultant in the field of intangible asset. So going by the figures provided by them. So this is the breakup of global value composition. Global value composition means value of all the listed company in the world. So going by that, actually that is divided into tangible asset, the disclosed tangible asset, disclosed goodwill, and undisclosed value of the intangible asset. So through this color coding, you will see, and the thing I want to highlight is around 46 percentage, around 46 percentage of the total value of the listed company across the world, that is undisclosed. That is undisclosed. So you will appreciate that that is a very high value. around 46, and gradually, actually 21, that went up to even 61. That went up to 61. So this is actually a trillion US dollar. So 61 is the trillion US dollar, and 47 is the a trillion US dollar. So you will appreciate sizable amount of goodwill or sizable amount of intangible asset that is undisclosed, that is off balance sheet because of the guidance provided in the financial statement. And these are the most tangible sector, intangible sector. So whenever you do the valuation, a very important, internet and software. So 81%, that is the undisclosed value of goodwill. Similarly, household products, so 70%, a cosmetic and personal care, 70%. Then actually this semiconductor 68 percentage, and remaining, as you can see in drink, that is 60 to 64. So that means supposing total value of a listed company is 100. So in case of internet, they have tangible asset of only 90 and balance 81. That is the undisclosed value of the intangible asset. So you will appreciate that how critical, how challenging for the valuer to make valuation. And therefore, actually now experts say it is time to go tangible about the intangible asset. Meaning thereby some type of guidance is needed within the framework of financial reporting standard, so that actually the homegrown intangible asset or internally generated intangible asset that is reported in the financial statement in a one manner or another manner. So that is a very important, the undisclosed value of intangible asset. And if you are interested to know, so these are the most intangible stock exchange, and you will find that our both the stock exchange, and there is NSE and BSE, that is actually part of this list, NSE and Bombay Stock Exchange. Likewise, moving forward, this is the component of S&P 500 market value. Going by the finding of this survey, so S&P is the stock exchange in USA. So these are the 500 biggest company by market value in USA. And going by finding of this survey, so in 2020, these company derived 90% of their value from the intangible asset. 90% value from the intangible asset, only a 10% value from their tangible asset. Now you see 1975, only 17 percentage came from intangible and 83 percentage that was from the tangible asset. So how actually this ratio has changed, that is highlighted here. And this is very important, intangible asset. This is the actually this challenge is not new. Way back in 1851, way back in 1851. So 27th July of 1851. This is the newsletter economics. So there it was specified patents are like lottery in which there are a few prizes and great many blank. So that is the reason actually the valuation of intangible asset has always remained in challenging, and a measurement is so difficult. Actually, it is kept away from reporting in the financial statement, and that was experience. So all this intangible asset, that is not new development. The challenges in valuation of intangible, that is not new development, and that was experienced by our forefathers also, and these are the top 10 intangible company in the world. So Apple, as you can see, that is number one company, and they have actually the intangible asset valued at around 2,700 billion US dollars. So you will appreciate the quantum of intangible asset going by this figure. So we will not spend time on that, but Microsoft, the Saudi Aramco, Alphabet, Amazon, Telsa, Meta Platform. So all this a telecommunication company, IT company, e-commerce company, petroleum company, they are a part of this list. So intangible asset, as we all are aware, so that is a non-monetary asset without a physical substance. So that is the meaning of intangible asset. Now we will cover the guidance provided in IBS 210. Intangible assets are non-monetary asset without physical substance, and that will provide a right or economic benefit to the owner. And these are the categories of intangible asset going by the guidance provided under IBS. So we have five categories of the intangible asset: marketing related, customer related intangible asset, artistic related intangible asset, contract related intangible asset, a technology based intangible asset, and then a goodwill. So as we all are aware that may comprise of a combination of these five types of asset. Many times that will be combination of these five types of asset. But mainly if you analyze, we can actually have three types of intangible asset mainly. So that is related to rights, relationship, and IPR. Rights, relationship, and IPR. So these are the three major type of intangible asset. IPR stands for intellectual property right. In today's world, actually, you all will appreciate the importance of valuation of patent, copyright, trademark, GI tag. So all that is that are a very valuable intangible asset. So that is IPR. And there are a different characteristics. So although a similar intangible asset within the same class share some characteristic, they have a differentiating characteristic based on the type of asset. Based on the type of asset. So if we take actually one example, so we can have actually the customer data. So customer data in today's world, you will appreciate that that is a very valuable and a great demand for a customer data. So that is just one type of intangible asset. A second type of intangible asset that we can take as executed a contract. Executed a contract. So information about the contract which are already executed. So that is also a very important information, and that is a intangible asset. Third is the customer relationship. Third is customer relationship. So customer relationship will cover both a current and a future contract. So the value of the that relationship, customer relationship, that will be more than the executed contract, and the value of executed contract, so that will be more than the customer data. Customer data merely may comprise of name, telephone number, and address of the customer. So when making a valuation, you may say these are customer related intangible asset, and therefore a similar value should be assigned to that. But you will appreciate if you analyze further logically, the customer data will always have less value as compared to the executed contract. And executed contract detail will always have less value as compared to customer relationship which is ongoing. Customer relationship which is ongoing. So that is what is highlighted here. Although similar intangible asset within the same class share some common characteristic, they have a differentiating character as we have seen here based on the type of asset. Purpose driven evaluation. So that is actually applicable in all types of evaluation. So a valuer must understand specifically what needs to be valued and the purpose of the valuation, and differentiating intangible asset based on purpose, that is crucial, and that can lead to a significant difference in a value. So that is about the types of intangible. Now, concept of goodwill. So we discussed about that. That is what is highlighted here. So goodwill is a future economic benefit. Future economic benefit. So, at the time of discussion on business standard IBS 200, we have discussed about that future economic benefit from a business and interest in a business like equity. So that is one example of interest in business, or the use of a group of asset not separately recognized in another asset. So that is actually a combination of the intangible asset. So that we highlighted here. So that is a combination of these will include marketing related, customer related, artistic related, contract related, or technology based. May I request all participants, please mute, sir. Gaurav Gupta, sir, may I request, sir, please mute. So a component of the goodwill, so element of goodwill will include a company specific synergy. Like actually, if we take the example, recently the amalgamation or merger between HDFC and HDFC Bank is concluded. So combined entity of HDFC and HDFC Bank, they have synergistic value. They have synergistic value. So that will be part of goodwill. So element of goodwill will include company specific synergy, opportunity for a business expansion, a benefits of an assemble workforce, benefits from a future asset, and assemblage and a going concern value. So all this will be part of goodwill, and the amount of goodwill that will dependent on a recognition of tangible and intangible asset. So this we discussed that in a PPA, residual value of a purchase consideration, that is the goodwill. Therefore, the value of goodwill will dependent on a recognized tangible and intangible asset, and that will lead to difference in its value for a different purpose. This when we need the valuation of intangible asset, so that is actually when valuing the business, real property, machinery and equipment. So even in evaluation of land and building, the evaluation of intangible or goodwill will be needed. In evaluation of plant and equipment, we will appreciate that today is the era of automation. So each plant and machinery will be automated, and automated plant and machinery cannot run without a software, without hardware. So that is actually all types of software that is part of intangible asset. So in valuation of machinery and equipment, we need to do the valuation of intangible asset. So that should consider associated intangible. Purpose of valuation, so that will include a financial reporting, for a business combination. So that is PPA as we discussed, financial reporting for a business combination, tax reporting for a transfer pricing, estate planning, litigation support, a statutory event like eminent domain proceeding, or the general consulting. So all these are a purpose of intangible, and these are very important consideration. Discount rate or a return on intangible asset economic life, very challenging to estimate that, and tax amortization benefit. So I hope you have a clarity about what exactly is meant by a tax amortization benefit or a TAB. So in any type of valuation of intangible asset, very important to consider the tab or tax amortization benefit wherever it is available. So I hope you have clarity about tax amortization benefit. If I explain that in very brief, because time is very limited. So for a tangible asset, we charge the depreciation. For a tangible asset, we charge the depreciation, and we all will appreciate that depreciation is a tax deductible expense. Depreciation is a tax deductible expense, so we get actually the benefit of a tax concession on a charge of depreciation in the income statement on a charge of depreciation against the revenue of a particular year. Same way, those intangible assets which are having definite estimated life, finite estimated life, so that will be amortized. That will be amortized in a similar fashion as we charge the depreciation on a tangible asset. Now, in many cases, the amortization expenses that also will qualify for a tax exemption. That also will qualify for tax exemption. So actually, it is not that all types of amortization will actually qualify for tax exemption. Actually from last 2 year, as you all may be aware, now goodwill amortization of goodwill, so income tax benefit tax exemption is not available. So that we need to check, and wherever it is applicable, so we need to consider that in our evaluation. So that is very brief detail about the tax amortization benefit. Now, non-financial liability, we will come at the end. Inventory, we will come at the end if a time is there. Plant and machinery, so that we cover something about all the classes of valuation. So plant and machinery. So this is IVS 300, as we discussed in the beginning. As per current version of IVS, that is plant and equipment. But now this is renamed as plant equipment and infrastructure. Plant equipment and infrastructure. So what is the definition of plant? What is the definition of plant and equipment? What is the meaning of plant and equipment? So plant and equipment, these are tangible asset. We all know that, which are held for manufacturing or a production, supply, rental, or administrative purpose. So these are the different purposes of for which actually a company will acquire the plant and equipment. So, depending upon the purpose of usage, or depending upon the purpose or usage, the you will appreciate that the value will be different. So, equipment, these are acquired or held for actually manufacturing, production, supply. Even actually, many cases, plants are given on a rental basis. Or that is used in administrative offices. So that is administrative purpose, and that is expected to be used over time. So that is for multiple years, multiple years. And for leased machinery, the right to use will follow this standard, and a right to use may differ in a lifespan from the machinery itself, So highest and best use, as we all are aware, this is the premise and guidance on a premise of value that we get from IBS 104. So under a basis of value, we have the premise of value, and premise of value is nothing but intended use or the expected use of the plant and equipment. So asset for which highest and best use is in use as part of a group must be valued with a consistent assumption. So highest and best use. So supposing a machinery is capable of generating 10,000 units of a particular good in one day, so that is its highest and best use. Now, due to some reason, if that particular machine is operated at 50% of its operating capacity, that is 5,000 units. So that will be regarded as existing use. So either we can take the premise of value as existing use or the highest and best use. Guidance on that we can get from IVS 104. So a subsystem may be valued separately if reasonably separable. As we discussed, intangible asset impact. So intangible asset, although not part of plant and equipment, that can impact their value. So like these are the example, like patents, dice, software, a patent, these may affect the valuation, requiring a consideration of IVS 210. So either actually the intangible asset that can be covered or that need to be valued under IVS 210 or under 300, depending upon the ground reality of each case, depending upon the information, data, detail available with the valuer at that particular time. And these are the evaluation factor. So inspection is essential. So a physical verification of plant and machinery, that is regulatory requirement, that is statutory requirement, as we all are aware. So inspection is essential, considering asset related factor. So the asset related factor will include technical specification, the remaining life of the asset. Very important to understand here what the remaining life of the machine we are talking about. That is not as per the financial statement. That is as per the estimate of the independent estimate of the valuer. We are living in the era of technological upgradation. So what plant and machinery is deployed for manufacturing today, that may become outdated tomorrow. One example, best example is Kodak. So a Kodak actually, once upon a time, photography means Kodak. Without making use of one of the product of Kodak, we cannot even imagine to take a photograph. Today, what is the market share of Kodak? We all are aware about that. Likewise, Nokia. Once upon a time, mobile set means Nokia. Now, what is the market share of Nokia? Because of technology, we all know. So, very important, a remaining life of the machine, that is independent estimation of the valuer, not what is reported in the financial statement. As we all are aware, within the framework of financial reporting standard, the management of a company will get many liberty. What happened in case of Byju's, we all are aware. So management can play actually within the framework of financial reporting, and one of the liberty available to the management within the framework of financial statement, that is to determine the method of depreciation, that is actually related to the estimation of life of a machine. It may happen that one plant and machinery that is valued at 100 crore, and on the same day, two different companies have purchased this plant and machinery, company A and company B. So it may happen that company A has estimated the life of this machine at 10 years, and company B has estimated life of this machine at 20 years, and management of both the company will have a possible explanation, justification for their estimate. So that is very important. This is the area where actually management can play effectively. So very important. Remaining life is the independent consideration of the valuer. Then a condition of the machine, very important. Actually, if two friends they purchase motor car on the same day, same make, same model, but after 5 year condition of the motor car will be different depending upon how that is maintained. So maintenance that is actually individual driven. So very important what is the condition of the machine. So these are asset related factor. Environmental related factor. So what is the location, environmental legislation impact, radioactive substance, toxic waste, license, so all this consideration. And incidentally, IBS 104, as we all are aware, that is a new general standard. So in that, actually now a consideration of ESG factor that is now made mandatory. That is now made mandatory. So very important to consider the environmental factor and economic related factor. So profitability, demand, highest and best use. So all these are a factor which need to be considered in evaluation of a plant and machinery. Obsolescence, we already discussed about that. In today's era of technological upgradation, the technology is becoming obsolete faster than what was expected originally. So in that, the judgment, professional judgment of the valuer, that will be of vital importance. So valuer should reflect the impact of all forms of obsolescence on the value. So valuer, in other words, not supposed to go by what is reported in the financial statement. Valuer need to have his own assessment about the remaining economic life of the plant and machinery, particularly in case of high value plant and machinery, and the obsolescence. Then asset attachment and integration. So consideration must be given to the degree of attachment or integration with other asset, defining what is included or excluded from the evaluation. So supposing in one factory, actually a gas turbine equipments are actually deployed, and that is actually attached with the other plant and machinery. So that is actually part of the entire production system. So on individual basis, the value of this gas turbine that can be different as compared to the value of same gas turbine when actually valuation of entire plant and machinery as a group is done by the valuer. So very important consideration need to be given to the degree of attachment or integration with other asset, and that will define what is included or excluded from the evaluation. Integrated plant and equipment items integrated within a building, like supplying electricity, elevators, these are part of the real property interest. If a separate valuation is needed, a special assumption must be stated. So either that can go with plant and machinery like electricity and elevator. So supplying electricity will require host of electrical equipment. So whether that is integrated within a building or whether that is separate, so that consideration need to be given. The additional assumption, so diverse nature and transportability may require additional assumption like valuation as a whole in place with different production scenario. So these are the additional assumption. Reporting requirement. So a valuation a report must include appropriate reference to matter which are addressed in the scope of work and comment on effect of excluded tangible or intangible that is required. So this will happen in case of plant and machinery many times. Two, three examples are given in here, like electrical equipment or the elevators, whether that is a part of the plant and machinery, the intangible asset like software which is deployed in an automated machine, whether that valuer has considered a value of that or not. So all that actually is very important. Valuation a purpose. So a valuation of plant and equipment. These are needed for financial reporting, leasing, secured lending, disposal, taxation, litigation, insolvency proceeding. So these are the purpose for which the evaluation of plant and machinery will be needed. Now, actually, we will go to a real property interest. So, real property interest that can be anything: a lease of plant and machinery, lease of land and building. So, all that will be covered within the real property interest. So, guidance on that is provided. So, what is a legal framework and understanding? So, property interest these are defined by a state or a jurisdictional law, often regulated by the national or local legislation. So, as we all are aware, these are state subject in India also. Property interest, that is a state subject, and central interference, that is very minimal. So some rights over land and building, these are held informally and traditionally. Understanding the legal framework, that is crucial. Legal framework, that is crucial. So definition of real property interest. So real property interest will include a right of ownership, control, use, or occupation of land and building. So all that will be covered within the real property interest. And there are three main types. So superior interest, subordinate interest, and right to use without exclusive possession. So these are three actually different types of interest: a superior interest, subordinate interest, and right to use without exclusive possession. Superior interest, so that will actually a leasehold, sublease, and a right to use without exclusive possession. Intangible asset impact, so that is again we discussed. So intangible asset fall outside real property classification, but that may impact the value. So supposing actually one particular building that is occupied by a owner, which is very efficient in his commercial dealing, in a business dealing. So supposing that owner is selling his business enterprise, and probably it may happen that actually that will actually result in a reduction of the business. So once the business is decreased, business is reduced, so automatically goodwill of that building will also come down. So that is actually the impact of intangible value on the real property. And clear scope definition, that is essential, considering inclusion or exclusion of intangible asset. And as we already discussed, IBS 210, that is the relevant standard for intangible asset. And common concept across jurisdiction. So different terms are used globally, but common concept include absolute ownership, exclusive right for a period, and non-exclusive right for a specific purpose. So here a very important immovability of real property and a value attachment. So immovability of land and building means the value attaches to the legal interest, not to the physical property. So what is the meaning of immovable property? If we want to get that, so in brief, that is provided in a Transfer of Property Act. But in detail, if we are interested, we need to refer to General Clause Act. General Clause Act. So there we will get the meaning of exhaustive meaning, precise meaning of what is the meaning of immovable property, what is the meaning of movable property. So that is very important. And transferred in exchange are the right, not the physical asset. So that is very important. So that is about the real property interest. And moving forward, identification of requirements. So compliance with IBS 101 scope of work will require description of the real property interest to be valued. So that is in all type of asset. Real property is no exception. What is the scope of valuation? What is the description of real property? So that is within a scope of work, and normally that will be done. And identification of any superior or subordinate interest affecting the value. And information, investigation and information source are very important. IBS 101 and 102, process of due diligence, that will involve a consideration of evidence required to verify the real property interest. Here, actually, I would like to quote one a case law that happened in Maharashtra. So one of the actually property that was valued by a valuer, and very high value was attached to that property because that happened to be the commercial property. And in that actually client of the valuer, he informed that this property is leasehold. So actually valuer believe that a valuer actually took that information and made valuation accordingly. And unfortunately that valuation report was challenged, and it turned out that actually lease deed had already expired on the date of valuation. Lease deed had already expired, and that was not renewed. So when lease deed is not renewed, so that possession, even if it is there with the client, so that will be considered as unauthorized possession. Unauthorized possession, and you will appreciate that the value of a property which is occupied unauthorized, so that will be a very less or a negligible. So very important to actually go through the title document, and always a title document that need to be cross-checked with the registrar's office or with the office of the revenue authorities. So evidence required to verify the real property interest. So leasehold is one of the real property interest, and extent of inspection, responsibility for information, building specification, service, ground condition, and environmental factor. So that will be covered under a due diligence. Anil Kumar sir, any questions, sir?
Sir, we will.
So it seems it was by mistake. We will move forward. So a special assumption, so agreed and confirmed special assumption that will include defined physical changes, changes in a property status, evaluation without considering other existing interests, property assumed to be free from contamination and environmental risk. So these are agreed and confirmed special assumption. As we all are aware, there are two types of assumption. There are two types of assumption. One is assumption which are part of the appointment terms and condition, and second type of assumption which is made by the valuer to arrive at the estimate of value. So very important. There are a certain assumption which are actually part of the contract of a valuation assignment. Contract of valuation assignment. If I give one example, supposing a building, commercial complex, very big commercial complex, that is under construction, and that is expected to be completed very soon. That is expected to be completed very soon. So in that actually the client may inform to valuer, although this building is under construction, you will treat this building as fully constructed for the purpose of valuation, because we are going to complete construction in a very near future. So that is part of the agreement. That is the part of appointment agreement. So that actually one type of a special assumption, and that need to be highlighted in the scope of work, that need to be highlighted in the engagement letter, that need to be highlighted suitably in the valuation report. So agreed and confirmed special assumption, and that will include a defined physical changes, changes in property status, a valuation without considering other existing interest. So supposing actually the a building is a leasehold building, but that is actually as part of appointment terms, that is agreed that that will be treated as without considering the existing interest. So all these are special assumption and purpose of valuation. So that is required for a secured lending, as we all are aware. For borrowing purpose, the valuation of land and building is required most. So a purchase and sales transaction, a capital gain dispute or taxation dispute, litigation dispute like a divorce, separation, etc. Compensation, we all are aware about that. Compulsory acquisition, insolvency proceeding, and a financial reporting purpose. So these are the purpose for which valuation of real property will be needed. Now, a development property, so that we will cover in brief, but prior to that, two things. Number one, if you have any questions on whatever we have covered so far, any feedback, so that is welcome. And number two, if convenient to each one of you, we will have a short break of around 3 to 4 minutes, and then we will continue for the remaining time. So prior to going into short break, any question from your side on whatever we have covered so far?
Sir, I would like to share one experience.
Yeah, go ahead, sir. Very good, sir.
I was working on one assignment in Solapur district where there was a empty land in the form of plot layout, and I tried to get evidence in the form of index 2 for the surrounding property as well as for the same plot. So there was a 10 times difference between the non-agricultural plot uh, rates that was there. That means the subject property which I was trying to work out with has two evidences which were 10 times higher than the surrounding property rates. Uh, then I become suspicious about it, and I investigated further. Then I came to know that those two indexes were fabricated by the same developer in order to cheat valuer, so that the rate quoted in the valuation of the land will be higher. So these type of things are happening every day. So due diligence is extremely important, as you said, under the IVS 400. That is what I
Yes.
wanted to share.
Yes. I fully appreciate your actually experience, sir. That is what is happening because in land, use of land that will determine the value of that particular plot of land. And you rightly said actually the priority of the client will be different. That will always be different. So
Yes,
process
sir.
of due diligence that will only come to the rescue of a valuer at a later date if unfortunately that particular evaluation report. Now we do not know exactly which report will be challenged at a later date. So always actually
Yes, sir.
we need to go by the process of due diligence. That is very much required, sir. Thank you for your sharing your valuable experience, sir.
Thank you. Thank you, sir. Thank
I
you.
have one question. This is regarding while we are talking about land. See, when under the IBC, when the land is to be valued, inspection is a must. Now, very often it is seen that there is a vast tract of land. Suppose a old company has a lot of land, and therefore, how much is the valuer's responsibility to see that he covers the area of the land? Unless a proper survey is done, it is very difficult to see that, okay, measure the quantity of land what he is inspecting. So, what are the valuer's obligations on them?
So, sir, have you gone through the circular or guideline which is issued by the IBBI on 1st of September 2020? 1st of September 2020. So that is detailed guidelines are used on detailed guidelines are issued by IBBI. You can note down on 1st of September 2020, and
Okay.
those guideline will give a reply to your specific query. That guideline is on use of a caveat, a disclaimer, and a limitation. And there it is specifically mentioned that number one, you obtain the surveyor's report because land and building valuer is not the professional in the work of survey. So he always will need a survey report. And whenever actually client fail to give the survey report, so that suitably need to be incorporated as comment in the valuation report, stating that the valuer has not got the survey report and a valuer has relied on the client comment that this particular plot of land or building that is free from encumbrances. So on that line, you need to incorporate your disclaimer in the valuation report. And if you refer to this 1st September guideline, 1st September 2020, so one of the specific guidance is on the point which you have raised, sir.
Okay. Thank you. Thank you, sir. Thank you so much.
Thank you. Thank you.
Sir, I would like to ask one question.
Go ahead, sir.
In case of lump sum sale, slump sale of an running entity that is going concern, it is a lump sum sale. So how to separate out intangible and tangible thing? Because taxation and GST will be on the tangible things, asset, land asset, plant and machinery. And intangible things, how to separate it out?
So that is very challenging. So what is the scope of valuation? So if the scope of valuation is actually a valuation of business as a going concern, valuation of entire business as a going concern, then if you are supposing going by the market approach, so there you will go by the comparable or a multiple. So there, once you are going with comparable company multiple or comparable transaction multiple of the similar company, so there probably you may not need the evaluation of each asset class separately. You will do the valuation at business entity level, composite valuation. Supposing you are going by the valuation as per income approach. So in income approach, main valuation method is DCF, discounted cash flow method. So there you are considering the free cash flow to firm. Either you will take the FCFF or FCFE. So there also you will not come across the valuation separately for each asset class. Now that question may arise when you are doing the valuation going by the cost approach. So cost approach is the residual approach, as you all will appreciate. So cost approach is to be used only when you are unable to derive value going by either market approach or income approach. So in that also cost approach also what you are considering is the fair market value of each of tangible asset, each of financial asset, each of intangible asset, and from there you are reducing the liabilities. You are reducing the value of liability. So that is the precisely method. But actually here I would like to give example of IBC. So under a CIRP, what is being done? Actually, valuers are appointed asset class wise. Plant and machinery separate, land and building separate, SFA separate, and then the resolution professional, he will add value of these three classes of asset to arrive at the value. According to my understanding, that is not the correct practice, because ultimate purpose of CIRP, that is a resolution of insolvency through ownership transfer. So when you are actually engaging in ownership transfer, so whether it is appropriate to consider asset class wise valuation. So how actually going concern value will be considered. And Kamlesh bhai, since you are from actually land and building valuation, I will give you example. Supposing I am having a two-story building, and that two-story building I intend to sell as one unit to one owner. So in that context, in that scenario, if I am doing the valuation from separate valuer independently of ground floor separately, first floor separately, second floor separately, and then I will add the value to arrive at estimated value of entire building, whether that approach is correct, or when I am doing the valuation of entire building from one valuer. So actually when you are doing the valuation separately, how they will consider the value of plot of land, because majority of the value will be derived from plot of land. How they will consider that? So that is the question, asset class wise valuation. that is not appropriate when the intention is to sell or transfer entire business as one unit, as a going concern. So that is my
Sir,
understanding.
I was interfere. I was asking regarding the food chain, a restaurant. There are many chains. They are selling this food chain or food restaurant as a going concern, having good profit and goodwill. So intangible things will be there, where the asset is very less, very
So
small, small. So
that is what I highlighted. This is, you are giving example of franchisee building. So that franchisee ownership will have certain value attached to it. So there actually that is what I am highlighting. Ki now more and more value is derived from the intangible asset rather than deriving value from the tangible asset. So that based on document you need to form a holistic view of entire business, holistic view of entire business, and there you will not only consider the value of commercial building, you will also consider the value attached to that franchisee. So franchisee is one of the intangible asset. Franchisee agreement, that is one of the intangible asset. So there you need to do the valuation of that franchisee based on income generating capacity. So if you can with and without method, that is one of the method of valuation. So if franchisee agreement is not there in that building, what will be the revenue? And with franchisee building, what is the revenue? So that is the value of intangible. That is one way of doing the valuation. I am just giving the one example. There are other methods also. So that is my understanding. Any further question or counter question to that?
sir, I wanted to ask some different way. Intangible value will be there, or for taxation purpose, for taxation, because there will be no tax on intangible. I think some depreciation, plant and machinery is there in a restaurant, some land asset is there. So how to separate out for taxation? Because taxation GST will be on the tangible asset only.
No, means you when you are considering the FCFF, where question of taxation will come into play, because a free cash flow to farm will exclude the taxation. There is the question of taxation attached to that. So you will take out the revenue, and revenue exclusive of tax. Whatever is the revenue that you will take exclusive of tax, then you will estimate the expenses, you will estimate the depreciation allowance, you will appreciate the amortization expenses, if any, related to the intangible, and then you will arrive at the NOPAT. We call that as net operating income after tax. So you will reduce the direct taxation also. You will arrive at NOPAT, and then you will include the depreciation, because that is you will add depreciation to NOPAT because that is non-cash expenses, and then you will give the impact of changes in working capital, changes in capex, capital expenditure, to arrive at the free cash flow. So that is how actually process is predetermined actually. There should not any means confusion relating to how to account for the this indirect tax levy. So you will always consider a revenue net of indirect tax, net of indirect tax. So that will be,
Yeah, I add something on this.
Yeah.
Kamlesh Bhai's point. I
Yeah.
think what he wants to know, suppose in some cases, assets are purchased on slum sale basis.
Sir, you have to unmute, sir. Devasi, sir, you need to unmute, sir.
Yeah.
Go ahead,
So,
sir.
sorry, sir. So now in IBC, we see that many cases, assets are purchased on slum sale basis. So therefore, a lump sum price is paid for acquiring an asset. And once the person who acquires, the purchaser's books, he has to take care of two things. One is he has to prepare a complete FAR because he has bought the assets, but there are no breakups available for each asset, how much he has paid. So therefore, he has to arrive at a breakup of the asset prices, asset values, and the liabilities as well. Assets and liabilities, he has to arrive at a breakup of those details, and the differential between the consideration paid and the net asset minus liability will be his goodwill or will be capital reserve. Now, these asset values, whatever he derives, possibly the GST will, the GST credit or GST claim, that can be it can be a benchmark for doing that. This is one way, at least the PPA part, sir. I think the PPA part is very clear. PPA is, that's how the PPA runs. Individual assets and liabilities are valued.
But I
There,
don't think, sir, sorry to interrupt you. I don't think there is any confusion because what you are telling is financial reporting and relevant
no, sir,
standard for that.
I'm not into that. I'm only saying that suppose somebody has bought an asset, so or somebody has constructed an asset through a contract which is on a lump sum basis,
Sir,
for
I
the
am
purpose
trying to
of
give
his
reply.
GST credit, he has to differentiate each asset, no? Because GST credit will not be same for every asset. So in that case, he has to put values to each asset. Suppose, sir, I construct a particular plant. Through a person, I say that, okay, I'll pay 1,000 crores for this complete plant. You have to do everything, design, engineering, supply, everything. So in that case, once the plant is constructed, this person is entitled to get some GST credit on the equipment what he has procured. So he has to derive the breakup value of the hard assets, plant machinery and all that, where he will get GST. Rest he will not get GST. So there is a need for differentiation. I think that is what Kamlesh Bhai is asking that question, that how to differentiate
correct.
tangible and
Sir,
intangible.
sir,
Correct, sir.
now let me give reply to your query. What you need to derive is the fair value of the asset acquired for the purpose of reporting in books of accounts of the acquirer. That is what you need to do. Okay, sir? And that fair value, you need to follow the guidance which is provided in Ind AS 113. Ind AS 113, which is on a measurement of fair value. Measurement of fair value. So you need to follow IFRS 13. So that is one of the basis of value under IVS 104. They have referred specifically a fair value as per IFRS. IFRS 13 or Ind AS 113. That is actually on a measurement of fair value, and that fair value is nothing but your exit value. Exit value. So if you sell that asset today, what is the realization? And detailed guidance on that is provided in the Ind AS 113. I don't think there will be any confusion if you follow that guidance, sir, in totality.
Right.
So apart from that, any question? So I think actually now we have no time for the break. So what we will do, we will continue because actually 10 minutes are left in the session. So we will continue and just so we will actually cover in a brief about the time is very less. So IVS 500. So that is on a financial instrument, and that, as I informed, that is completely a rewritten, completely a rewritten. So what is the meaning of financial instrument? So we all are aware about that, but in a brief I have covered here. So contractual nature at first, actually any financial instrument that is with reference to the specific financial contract, financial contract. So a financial instrument, these are essentially contracts that will establish rights and obligation, rights and obligation. So if we take one of the example like financial derivative. So in financial derivative, that future contract or forward contract. So these both the party, buyer and seller, they will have a right and obligation. Whereas in option contract, which is also one of the financial derivative, one of the financial instrument. So that is contingent in letter, contingent in nature. So buyer of the contract has right but not obligation. Right but not obligation. So that is very important. The nature of contract will determine the rights and obligation of both the party, the buyer and seller. So a financial instrument, these are essentially contract that will establish the rights and obligation between the parties. Parties here, that is buyer and seller. So these contract can vary widely in complexity and scope, but generally involve the exchange of cash and other financial assets. So generally, either the financial contract will involve monetary terms, or that can result in exchange of other financial asset. And so that is exchange of other financial asset. Now, diverse types. So a financial instrument, that is a broad range of asset and liability. Broad range of asset and liability. So they will include traditional instrument like stock, bond, cash equivalents, as well as more complex instrument like the derivative, structured product, and hybrid security. So actually, depending upon the nature of contract, that will be determined whether the financial instrument is traditional in nature, or that is in complex in nature. That is in complex in nature. So these are the example equity instrument. So that will represent ownership. That will represent ownership in a company like stock or a share. Stock or share. Then we have the debt instrument. So that will represent a loan or obligation to repay a borrowed fund like bonds or a promissory note. Derivative instrument, so these are financial contract whose value is derived from the performance of an underlying asset, index, or entity. So examples include option, future contract, swap contract, forward contract. So either that can be equity contract, or that can be debt contract, or that can be derivative contract. And we have a money market instrument. So as we all know, the original maturity period of the money market instrument, that will be less than 1 year. So that will be regarded as money market instrument, and that will have high liquidity. So these are many times regarded as cash equivalent, and that will include the treasury bills. So as we all are aware, treasury bills actually are issued by the Reserve Bank of India on behalf of the central government. And many of you are senior people, so I will request, please invest in treasury bills if you have not already started that, because return on treasury bills, that is much more higher as compared to a return on bank fixed deposit. So try to avail that opportunity. Treasury bill, commercial paper, and a certificate of deposit. So these are the money market instrument. And then a purpose and a function. So financial instrument serve a various purpose in the financial market, including a capital allocation. So that will be how capital allocation, a facilitation will be done. So that will be by connecting the saver. We all actually save a portion of our earning and investor with a borrower and issuer. Managing and transferring risk, all types of hedging transaction are nothing but managing and transferring the risk through hedging, speculation, and insurance, providing investment opportunity and avenue for diversification, enabling liquidity and a price discovery in a secondary market. So these are the purpose and a function of a financial market. So financial instruments are part of the financial market. You will always appreciate. So valuation complexity, very complex, the valuation of a financial instrument. So that can be complex due to their diverse nature and influence of various factors like market condition, interest rate, credit risk, investor sentimental. So you will appreciate all these are macroeconomic factor, and keeping tab on macroeconomic indicator, that is a very time consuming effort that will need expertise. So valuation method may vary depending on the type of instrument and the context in which that is being valued. Regulatory consideration, that is very important. These are subject to regulatory oversight. Like in India, we have Reserve Bank of India, which is the regulator of the financial market. In USA, they have the Federal Reserve. So central bank of each country, they will provide the regulatory oversight over the financial market. So regulatory oversight and reporting requirement, which are imposed by financial regulator and accounting standard setter. So we have actually MCA. So MCA will actually provide us guidance on accounting standards. So compliance with the relevant regulation and accounting standard, that is essential for accurate reporting. So this is the precise meaning of financial instrument, and this is guidance as per the IBS 500. So in simple word, first I have highlighted, and then what is the guidance. So a definition of financial instrument. So these are contract creating rights and obligation for case or other financial consideration. So that we covered, and types will include the derivative contract, hybrid instrument. Hybrid instrument, that is we can take many example of that hybrid instrument, like option contract or any other type of contract, like convertible security. So that is example of a hybrid instrument. Fixed income, a structured product, equity instrument, and that can result from combining other instrument in a portfolio to achieve a specific net financing outcome. So portfolio management, as we all are aware, in case of financial instrument, that is of vital importance. And portfolio managers or the mutual fund manager or the AIF fund manager, they play very important role in management of the portfolio. Purpose of valuation, so there can be many purpose: acquisition, merger, sales of business, purchase, sale, financial reporting, legal or regulatory, internal risk and compliance procedure. So all these are purpose of valuation of the financial instrument. Like that, actually, I have incorporated further guidance in brief from the financial instrument. But since time is over, I will not bother you much. And what I will do, I will forward this PPT through the organizer of this event. Actually, I need to cover a lot, but as I informed you in the beginning, this topic is having a very wide coverage. And even if we continue for whole day, probably actually we may not be able to give full justice, because each and every asset standard we can go on for a 3 to 4 hours. So with that, I will end here, and I thank each one of you for your attention throughout this session, non-stop of 2 hours, and making that a very interactive knowledge sharing session. We all learn from each other in this process. So thank you very much. But before I hand over to the organizer, if still you have any question, thank you, Chirag ji. Thank you, all of you, for your kind word through the chat box. Thank you, Dasu ji, Makaran ji. So if you have any question, any feedback, so that is welcome. Feedback for the next session, if this session has not met your expectation, or if you have any question, so that is welcome. Thank you, Kamlesh ji. Thank you, sir. Shiva Prasad ji, thank you, sir. So it seems no question. So I will hand over cake to the organizer. And once again, thank you very much for your attention throughout this session. So, Sarma sir, may I hand over you,
Yes, sir.
sir?
Yes, sir. Yes, sir. Yes, sir. So, as no questions are coming up and stipulated time for the CEP is also over, so we end this session here. I thank our speaker, Chatwani sir, profusely. Thank you very much, sir, for covering the topic very nicely. And we are grateful for your association with our organization. Thank you, participants, for your participation. Please share your feedback. Thank you very much. Thank you, Kajal madam.
The one who have registered for next session can please log in with the new ID which we have shared on the group. Thank you, everyone.